day, management, fund managers, analysts, bankers, and everyone else online. I would like to welcome you to Thai Union Earnings Conference Call for the fourth quarter 2020 results release on Zoom meeting and Facebook Live. The executives joining us today are Mr. Ludovic Garnier, Group CFO.
Hi, good evening everyone. Good morning for the others.
And Ms. Narissa Pahunlat, or Kun Amy, Group Accounting and Controlling.
Hello everybody. Good evening Thailand, good afternoon Europe, and good morning USA.
The session will be approximately 1 hour, comprised of a presentation followed by a Q&A session, and it will be conducted in English. During the Q&A session, if you would like to raise a question, please feel free to either submit your question in the chat box on Zoom or Facebook Live, or you can raise your hand and we will ask you to unmute. During the presentation, please be reminded to keep your microphone muted at all times. Now, please allow me to pass the stage to Ludovic Garnier to begin the presentation. Thank you.
Thanks a lot, Lina. I'm very pleased to be with you tonight. As you know, 2020 was a very unique year, not only for us, but I think for the whole world with the COVID-19 pandemic. Looking back at 2020, it started first in Asia and in China, and then it moved to the US and also to Europe. And then there was a first wave and then the second wave. So it was a very unique year for all of us. So my first thought is really for the people who lost some friends or some family members, or for the people who are sick, still sick on this one. I want to have also a specific thank you to our employees and our people. 2020 has been a really challenging and tough year for all of them because of the COVID-19. And I have a specific thanks to the people in the US or in the UK who have been working from home since almost 1 year already. So you can imagine it's very difficult to work in such a condition. On a more personal note, I would like to say also hello to Jörg Ehler, the previous group CFO. You know that most of you knew him for sure, and I'm sure he's watching the video. So hi Jörg, and looking forward to see with you. Okay. Now we will move directly to the presentation. We have some good news for you. You will see our numbers are very healthy for Q4 2020 and for the whole year. So just jumping directly in here, we'll comment the Q4 2020 numbers. Overall, you will see we have a strong growth of our net profit by 38%. The two key drivers for such a growth are the Ambient and the pet care and others business. On the sales, so we achieved 33.5 billion baht. Reported growth is 1.9%, mostly coming from the volume increase by 0.8%. And again, here you will see the Ambient, and we will deep dive after in the details, but the Ambient business is growing a lot, close to 9% in Q4 2020. We follow the same trend compared to what we could see before in Q3 and in Q2. The pet care and other business is also growing by 8% in Q4 2020. This is one of the great achievements we have over the quarter. We have one downside, which is on the frozen business, which is declining by 6% compared to 19. Okay, so if you exclude the effects, in fact, our sales are actually declining a bit by 0.9, and we will elaborate on that. Gross profit, this is one of the very strong success of this quarter. We are again at 18% in Q4 2020. This is the third quarter in a row that we are around 18%, or we are overachieving 18%. If you remember 3 years back, it was one of our key challenge, and now see over the last 3 quarters, we over-delivered compared to 18%. And again, here the key drivers are the Ambient, the pet care, the mixed segment, and the frozen business is also recovering in Q4 2020. Okay, so in terms of top line, we still have some challenges for the frozen business, but in terms of gross profit margin, it is strongly recovering in Q4. As a result, OP is quite strong, 1.9 billion baht. This is pretty unusual for us. Normally in Q4, we don't have such a high OP, but here, thanks to the very healthy gross profit margin and the strong top line also, we have a good OP. Okay, you will see that we have some increase in our SG&A, increasing from 11.4 to 12.2%, and Kun Amy we'll elaborate on that. But very strong OP, very strong net profit also, 1,457, increasing by 38% compared to last year. Okay, again coming from a very strong OP, and below OP we have also some good news on the other income, on reduction of the finance cost, and also on the other lines. Moving to the full year numbers, okay, here we are increasing everywhere, so it's quite nice to present. You can see the sales overall are increasing by 5%. We had 132 billion baht for the whole year. The gross profit is increasing by 16%. The OP by 39% OP recovery compared to last year. This is really great performance. EBITDA, we are just below 13 billion baht. This is all-time high for Thai Union. Net profit, reported numbers are increasing by 64% at 6.2 billion baht. I think this is the first time we ever achieved 6 billion baht in terms of net profit. If now you exclude the impact of the Antitrust last year, we are still recovering by 20%, so still really recovering compared to last year. We will elaborate also on our net debt situation, and you will see we have managed to improve and deleverage our debt in 2020, moving down from 1.07 net debt to equity ratio to 0.94. So you can see here why we are very happy and pleased with such a performance. I think this shows very well the trust of our consumers in our products, and also the ability to manage to deliver our performance in 2020. I really love this chart here. So this is a long-term story since Q1 2017. And if you get back to this time, 17 and 18, look at the gross profit margin. During that time, these years, we are around 14-15% gross profit margin. And we told you guys we have a very specific plan to improve and to turn around the performance. And you can see in 2019, we were really improving, and we were around 16% gross profit margin. But you can see now, in 2020, a clear step change on the gross profit margin. And the performance over the last 3 quarters, very stable, around 18%. And 18% in Q4 for us is really important, okay? Top line also was a challenge in 2019. We were decreasing. Again, there was some FX impact, but 2020 we have been growing every quarter. If you remember, Q1 2020 increasing by 6%, and then Q2 by almost 3%, and then Q3 by 9%, and then now Q4 by almost 2%. So these are really great achievements, and we are very happy about this one. We told you a few years ago we will get back to this kind of high level, we'll turn around the picture, and I think we really delivered. Of course, we can say that this year we benefited from some unique circumstances, and this is absolutely correct. We are fully aware of this one. This is why at the end of the session we will do a quick focus on our expectation for 21, and we will also present you some overview on the strategy until 2025. Very quickly, because here the picture is not very different compared to the one we had in Q2 and Q3. The Ambient is performing again very well this quarter. We are benefiting from a strong sales push, and Amy will elaborate on this one. But the market conditions are quite aligned with the one we face in Q2 and in Q3. Strong push for the whole Ambient category. The people are still working from home. They are moving to more healthy eating. Plus, we had one specific operations happening in Q4 2020 with a push on the promotions in Europe and also in the US, and Amy will comment on this one. Frozen, as I mentioned, we are declining in terms of sales compared to last year, so it's a bit different compared to Q3. If you get back to Q3, the frozen business was recovering, and now in Q4 it's declining. Why? It's mostly coming from our operation in the US. Q4 2019 was very strong in our frozen operation in the US, and we were not able to replicate such a performance in 2020. Plus, our operations have been affected by the port congestion issue and also the container availability issue in Q4 2020. The last category, pet care, value-added and others, we will elaborate on this one. This is really one of the key achievements of the quarter, both in terms of top line, but you will see also that the gross profit margin is record high and here we are really benefiting from the move to more innovative products. Just a quick update on our operation and COVID-19. And I think we can say really that Thai Union overall has been managing quite well the issues created by COVID-19. All our operations in Thailand, they remain open. You know that there was before Christmas a peak in Samut Sakhon of COVID-19 cases. Samut Sakhon is precisely the region where we have in Thailand most of our operations in this one. But we managed quite well the operation. We strengthened all our measures here, and thanks to this one, we didn't have to shut down any factories. Another location also where we are facing some issues were Seychelles, and here the local government decided to put our factory as the first priority for the vaccination. We did already the first round of vaccination happening in Seychelles, and we are doing right now the second round of vaccination. These are the two key regions that we wanted to highlight for you. We have some issues also in some other countries, but overall, I think we have been managing quite well in our operations. We are not stopped. Okay, we have a very clear focus on the safety and the health of our employees. This is for us one of the key focus, and we have been delivering well in 2020. Last but not the least, I think we have been supporting really very strongly the local communities, and the next chart will show you this one. Overall, I think we have been donating more than 3 million servings of our products in 2020. Here we just wanted to show you, because it's in all our operations. In the US, it's very, very large, also in Europe, and also in Asia and in Thailand specifically. Okay, here we are not talking about product donation, but at the beginning, you know, there were some countries where they were missing some masks and some protection. So here we contributed, and we provided them with some sort of equipments in order to help the communities to face with this pandemic. Another very good news of the quarter, and we are very pleased with these developments, which is the conclusion of the US Antitrust litigation. And we did a press release in January where Cozy, Chicken of the Sea, our US Ambient operation, announced that they have reached some agreement to settle final cases with the final plaintiff and 2 class action. Of course, they will have to be approved by the court in 2021, but now we found at least an agreement on principle with these plaintiffs, and we are very happy. This is for us the end of a 4 years or even 5 years process. It brought a lot of distraction for the management in the US, but now we are getting out, and we are really confident about the future of our operation in the US, and really excited when you look at the performance in 2020 and the real turnaround. Really looking forward to see what will be the performance in 2021. Another one where we did some communication, which is the sustainability linked loan. Okay, we just issued this one for an equivalent of 12 billion baht. I think we were the first one to issue some sustainability syndication loan in Thailand for roughly 6.5 billion baht, and also combined with a subscription also in Japan, and roughly for the same amount, a bit less, for 5.5 billion baht. And I must say that I was very surprised and very pleased also with the success that we have in the other subscription. We did have a lot of other subscription, both in Thailand and also in Japan, and we are very pleased with this one. So what does it mean exactly? So it means that we have a term loan where we have some specific KPI, okay, and the KPI are covering the greenhouse gas emissions, the monitoring, electronic monitoring of the tuna fishing vessels, or also the DJSI, okay? It means that here we have some specific KPI. If we meet with this KPI, then we will benefit from some discount on the interest rate. And we are extremely pleased about this one. Of course, this will be monitored by a third party, by the DJSI, and also some third party consulting firm for the other one. So we will not monitor only by ourselves, and there will be some third party advisor saying, yes, you met with the KPI, or no, you missed with the KPI. This is one of the great success. You know, we have been investing a lot over the past years in sustainability, and now we are really, it's a clear proof that we can gain also some money and save some money thanks to this one. So that's why we say this is for us a very significant step in the blue finance for Thai Union, but not only for Thai Union. I will say for the whole industry. We were the first one to do this one in 2020. We want to continue further, and we encourage the whole industry to move in this direction. A quick update also on our expansion on some new category of innovative products. And we told you already since quite a while that we want to shift a bit our portfolio. So we signed 2 joint ventures in 2020 and beginning of 21 also. The first one is called Interpharma Zivita. We'll be together with the company called Interpharma, and they will be focusing on health and well-being supplement products in Thailand. The second one, together with ThaiBev, we issued a joint venture called Food and Beverage United just in October 2020. And this joint venture will be focusing on the nutritious food and beverage products. Okay, these 2 have been managed by TUI, Thai Union Ingredients, which is really one of the business where we want to invest over the next years. The last one, still on TUI, and we discussed a bit last quarter about this one. We launched the new tuna bone calcium powder, manufactured in our facility in Songkhla in the south of Thailand. With all of this, I think we can see a very clear direction on where do we want to invest in the next years. We have some strong expectation behind each of these points. Very quick focus here on some NPD, new product development. On the left, you can see the Oh My God meat, which is the plant-based seafood and meat products. It's quite new for us. We are very happy about this one. This is also one of the other area where we want to invest in the future. So right now the impact, it will be launched soon in March 21. At the beginning it will be small, but this is a very clear proof of our intention to grow in this direction. On the right you can see the other NPD specific launch in Thailand for the After Yum for our select products. It's really good. You just need to try this one, and I'm sure you will enjoy. A quick update on our Cvc Corporate Ventures. If you remember 2 years ago, 2019, we said we want to invest $30 million in the Cvc. We did some few investments. The last one I want to mention to you is Blue Nalu. We just did the communication on this one. I'm sure you know Blue Nalu. This is a US company-based operation, and this is a leading sale-based seafood company on this one. Now we have something like 6 or 7 different investments, and you can see here the different category. The first one is alternative protein. The second one is functional nutrition. The third one is a value chain technology, and the last one is a bit specific. This is a fund investment, investing also in the protein activities. So you can see that here, you can see clearly the direction where we want to grow. Okay, and here we want really to build an ecosystem. Okay, it's not only about Thai Union. We want to build a whole ecosystem, and we cannot invest everywhere. So we want to do some very dedicated and specific investments in some areas where we believe there is some potential for growth, and it's also good for the world. Okay. Some awards and recognitions. Okay, again, we've been benefiting from some awards in 2020. You can go through the list. I will just mention maybe the first one. We were ranking number 2 in the 2020 DJSI. Again, we are very pleased about this one. We are decreasing a bit versus previous years where we were number 1. So it's a very high competition to be number 1 and number 2. However, we are still very pleased with this performance. I think the difference with number 1 is very small, and we try to catch up next year. And you can go through the others, but again, we are pleased with these awards. Just a quick overview, and of course we have some record year in terms of net profit this year. So we are about to announce the final dividend of 40 setang per share. The full year dividend for 2020 will be 0.72 setang per share. The payout ratio is between 56 to 57%, in line with our guidance, which is above 50%. And here we really wanted to show our trust in the future of Thai Union. And we want also to compensate the shareholders. We know the 2018 and 19 in terms of dividend were not great. Very unique reason for this one with the Antitrust. And now in 2020, the Antitrust is done, is behind us, and we are ready to have this kind of high dividend, and very pleased for this one. So having said that, I will pass the floor to Kun Emi. Very pleased to have Kun Emi with us. It's her first time with us. I'm sure she will do well. Thanks a lot, Kun Emi. Back to you.
Thank you very much, Ludo. Hello again, everybody. And let's start from key takeaways. Ludo have already mentioned to some of the material on this slide, so I'll go very quick. We delivered top line at 33.4 billion Thai baht, and the gross profit margin were at high 18% versus 16.1% last year, driven by shifting to mix towards higher margin products. Operating profit increased 26%, and net profit also increased 38% year over year. SG&A up 9%, and Red Lobster contributed share of loss about 320 million baht. Tuna prices increased 40% year over year. However, there was sequential decline quarter over quarter and has continued to drop to $1,200 per ton in January 2021. And we expect some inflation in the future months. And tuna prices within 1,300 to 1,700 USD per ton in this range are within our expectations. Next one is the sales growth. We are very pleased, very happy with the top line results. If you look at the quarterly information, 33.4 billion Thai baht increased almost 2% year over year, driven by the strong performance in ambient and pet care, but offset by the soft performance in frozen, like Ludo mentioned, mostly from the US operations and some delayed shipments in the fourth quarter. If we exclude the FX, top line decline 9/10 below a percent year over year. And I like to show this slide to everybody. So this shows Thai Union diversified portfolio that proved to weather the storm of the pandemic. On the left-hand side, the ambient business performed well, driven by people continue eating at home. Right next to it, frozen dropped because most of the products are related to restaurants. Very next to it, pet care grew very huge at 18%, driven by people staying at home, spending money during this pandemic, with their furry friends. And lastly, Thai baht depreciated in value, gave us the favorable impact to our net sales. Revenue structure by geographic and by business, there's no significantly change between 19 and 20, so I'll move to the next slide. Gross profit margin were high at 18% and above in the last 3 consecutive quarters, driven by shifting to mix towards the higher margin products, and that also pushed to our full year number to be 17.7% gross profit margin, very high compared to the prior years. Despite the COVID-19 situation, the second wave in Thailand since the fourth quarter of 2020, we managed the situation well. There's no closure or there's no shutdown in any of our operating plants. For the operating profit, for the quarter, we were at 1.9 billion Thai baht, improved about 26% year over year. This is driven by the good performance in gross profit margin. SG&A increased quite a bit at 9%, driven by the negative impact of FX. Marketing and advertising expenses, we pushed the promotion phasing. It's mostly in Europe from the second quarter to the fourth quarter, as we decided to invest in our brands. And lastly, we had higher logistic costs driven by the port congestions and the container shortages that Ludo just mentioned. Full year picture, operating profit, we ended at 7.8 billion Thai baht, improved 103% versus 2019 reported basis. EBITDA for the quarter, we were at 3 billion Thai baht, improved 12% year over year from the strong operating profit and higher other income, mostly from the higher interest income. For the full year, we were at 13 billion Thai baht, improved 27% versus 2019 on the reported basis. For the net income, quarterly, we were at 1.4 billion Thai baht, improved 38% year over year. And for the full year, we were at 6.2 billion Thai baht, all-time record high. In Q4 2020, we had one-off of a fair value adjustment in Russia for the amount of 146 million Thai baht. If we exclude this amount, our net profit landed at 1.6 billion, or 30% improved year over year. Earning per share for the quarter was at 0.29 baht per share, improved 21% versus the same period of last year. And for the full year, we were at 1.26 baht per share, improved about 58% versus last year reported basis. With that, I'm going to hand it back to Ludo.
Thanks a lot, Amy. So this is our specific focus on our usual focus on Red Lobster. In Q4 2020, you can see here all the impact in our P&L. Red Lobster delivered in Q4 2020 a share of loss by 321. So it's a deterioration if you compare to Q4 19, where we were at 243. Few explanation about this one. You know that traditionally the Q4 is always a loss making for Red Lobster, and this is historically the lowest quarter for them in terms of seasonality. So we are facing with the same in 2020, and of course we are facing with still the issues of the pandemic. If you remember, in Q3 we told you that all the off-premise businesses were open, and we were operating something like 94%, if I remember well, of the dining hall. In Q4 there was an increase, a second wave of the COVID-19 in the US, and now they are only operating 78% of the dining halls. So basically they have to close some of them. The restrictions are still here, and in average we operate around 50% of the capacity. Okay, so these are the key drivers and explanation also for the share of loss of Red Lobster in Q4. Apart from this one, on the other line, we are kind of stable. Other income, interest, expense, and income tax, there is no significant change compared to what we had before. One very good news to be announced is the refinancing of Red Lobster, and there was some question on this one after Q3, and you knew that we had to refinance Red Lobster because we were very close from the maturity of their loan. So now we can announce that they successfully refinance their existing loan in January 21. There is no impact for us. We did not provide any guarantee, or we did not provide any new loan, so there is no increase in Thai Union exposure. Cash flow performance. So here we achieved 1.1 billion baht in Q4. Honestly, we are very positively surprised on this one. If you look at Q2 and Q3 performance, which were exceptionally high, I was expecting personally a decrease in Q4. You know that usually we have an inventory build up in Q4. We managed to generate again some positive cash flow in Q4. For the full year, we had 10.4 billion baht of cash flow. The cash conversion rate is super high, 1.16, a record high of the last 5 years. So very strong performance in terms of top line profitability and also cash flow. Thanks to this very strong performance, we managed to deleverage our net debt by almost 3 billion baht, from 55 to 52 billion baht. And if you look at the key components of this one, the first one is, as I mentioned, the record high EBITDA. The second one is the Capex. The net Capex, we spent 3.7 billion baht in 2020. This is lower compared to what we spend usually. And if you remember back in Q1 2020, when we were facing with the first impact from the COVID-19, there were a lot of uncertainties at that time. And we decided to freeze or to delay a lot of the Capex project just to make sure that our cash was preserved in 2020. So this is a key explanation for the low Capex in 2020. Apart from that, we have our usual operation, the net interest paid, the dividend also, which is a bit lower compared to what we have usually. Usually it's above the 3 billion baht. Now it's below the 3 billion baht in 2020. And we have one unique impact also coming from the program of treasury share repurchase. And the impact is 1.5. Despite all of this, we managed to deleverage from 1.07 to 0.94, our net debt to equity ratio. And we can be very pleased about this one. Next slide, slide 35. I will go quickly. There is no significant change apart from the fact that we did refinance in beginning of 21 a significant portion, 12 billion baht of our loans. The ratio here are all improving thanks to the profitability. In terms of inventory days, 125 days. We're quite happy with this one. The net working capital, 104 days. We have an increase of the inventories in Q4 that was expected, and it happens. But overall, the situation is really strong and very healthy. If you look at the ratio, net debt to EBITDA, we are now below the 4 to 4.5 target. We are just at 4.02. And in terms of net debt to equity, we always communicate that we want to be between 1 to 1.1 range. We are now below since 3 quarters at 0.94. ROE and ROCE, I don't comment. They just increased thanks to the increase in profitability. Just a quick overview on the raw material price, and Amy already commented the tuna price. Salmon price, for your reference, is record low in Q4 2020, and you can see here the numbers, and we are very pleased with this one. There are some specific conditions. The consumption in China has been decreasing, so there is less pressure on the salmon overall, so it's record low right now. It's increasing a bit in 21. The shrimp price overall, there were some ups and downs all along the year, but overall we were quite lucky, and it's quite okay. For the tuna, it was low as we mentioned. It decreased further to 1,200 in January 21. We expect some kind of inflation to happen, but we don't expect in 21 some significant changes overall on average over the whole year compared to 2020. The effects, this is something you need to have in mind. And you know we have been suffering from negative impact from the effects over the last years. In 2020 there is a shift, and now we are benefiting from positive impact, mostly coming from the euro and also the GBP, a bit also coming from the USD, but not that much. So the key drivers, and especially for us in Q4, are really the euro and GBP increase and appreciation versus Thai baht. Quick focus on our 3 categories. So first of all, the ambient, and I want you really to appreciate this performance. Our ambient sales are growing by almost 9% in Q4 2020, mostly driven by the quantities and the volume grows by 7%. Over the full year, we are increasing by 14% between 2019 and 2020. So this is an excellent news for us. Gross profit margin, we are also very proud and very happy about such a performance. And you can see a very regular, very strong performance every quarter. And we managed to increase over the whole year from 19.4 to 21.1. So these are really some great achievements. Frozen, the picture is a bit different. We mentioned that already. We are still facing with some challenges clearly on the top line. We are declining by 6.5 in terms of sales, by 7% in terms of volume. Over the whole year, we are declining by 5%. Okay, so in terms of top line, this is one of the explanations for the frozen business in 2020. But look at the gross profit margin picture. Okay, Q1 and Q2, very difficult situation. We really went down to 7% gross profit margin. But now since Q3, we are back above the 11%. So we are above compared to what we had before. So the gross profit margin is back on track. Okay. However, we still need to fix this top line. It's a lot depending On the food service activities, you know that food service is one of the key customers for this category. And as soon as we will see some recovery in the food service business, I'm sure we will see some recovery in the frozen business. The last category, pet care, value-added and others. I mentioned to you, the sales increase 8% in Q4, really strong. Over the whole year, it's also an increase by 7.7%. Very happy with this performance. And I think here we are really getting the benefits from our investment in the past years in the pet care, in the value-added products. Look at the gross profit margin. We achieved in Q4 a record high 29%, 29.4%. And if you look year on year, we are increasing by 21.6 to 26.7. Okay, so we mentioned over this one, we explained the different factors, but very happy about such a performance. Sales, I go quickly on this one. Of course, the US are still our first market, increasing in Q4. We had 43%. Europe was a bit down, but around 30%. And then we have a decline in our domestic market in Thailand to 10%. I think we were at 12% a year before. Just a quick focus by region. US operations, we are growing by 8% in Q4 2020 and by 11%. Okay, and we have very different activities in the US in 2020. Our ambient operations with Cozy were really strong and performed really well. Our frozen operation, they were facing really some shortfall in terms of sales in Q1 and Q2. And I must say that I was very impressed by their recovery in Q3. In Q4, they are declining a bit. However, it's improving. So this is something I want to insist on, the Europe. And you can see here very strong growth from the sales by 21% in Q4. This is very impressive. Let's make it very clear. We have a strong FX impact coming from this one. I mentioned to you, Euro has been increasing by 9% and GBP by 4%. But even if you exclude these two FX impact, we are still delivering a very strong growth in Q4 2020. Over the whole year, we are increasing by 9% compared to 2019. We are benefiting from the very high demand in our products, a very good product mix also. We did also some promotion push specifically in Q4. But I think with these numbers, you can really see the trust of our consumers and customers in our brands and in our products. Thailand, the picture is less nice. We are declining by 20%. I think we are strongly impacted by the lower tourism activities. Many restaurants they cannot operate properly on this one, so we are declining, and our food service business is not recovering yet. So we are still facing with some challenge in our domestic market. Emerging markets and the rest of the world, we are declining by 11%. We very often have some ups and downs in this region, and we have seen some decline in Asia and in Australia, in Africa. However, we have some good news in Japan, which is one of the key market for us, where we can see some kind of recovery. So here, we just wanted to provide you, and I'm sure that in the question you will see, okay, what is the impact of the COVID-19 and what is your guidance for 2021? And I think with this guidance, you will see kind of estimation of what could have been the impact for us of the COVID-19 in 2020. So in 2021, just to make it very clear, we are very confident on Thai Union activities. So in terms of numbers, the sales, we expect a 3 to 5% top line growth. We do forecast a gross profit margin around 17%. SG&A to sales should be roughly aligned with this year between 11 to 12%. Interest rate, we don't forecast any significant change. Capex, we do expect some significant change here. We plan to invest quite substantially in 2021 between 6 to 6.5 billion baht. And I will elaborate on this one maybe a bit. I mentioned in 2020, we really decreased our spending in terms of capex for different reasons, for cash preservation and also because of technical issues. Sometimes the technical could not access to our factory, so we plan to catch up in 21, and we have also some very specific project to happen in our new activities, like the new protein factory, like a new culinary factory, also where we want to invest massively in 21. Dividend policy will not change. We will continue with a 50% dividend payout ratio. So just to give you some flavor, if you compare to 2020 performance, in terms of sales, we did achieve close to 5% in 2020. Okay, so we do expect some kind of normalization to happen in 21. So we don't expect to deliver the same performance, to make it very clear. However, we are still targeting to deliver a 3 to 5% top line growth. On the gross profit margin, we know perfectly that in 2020, we benefited from a very strong positive mix segment, meaning the ambient and the pet care and others segments have been growing to the detriment of the frozen business, which is our less profitable business historically. We do expect some kind of normalization to happen in 21. The frozen business will recover, and there will be kind of a mechanical effect, and we do expect our gross profit margin to drop a bit compared to our 17.7% performance in 2020. We just wanted also to give you a quick overview in our 2025 corporate strategy. I will be quick on this one, and maybe tomorrow we have more time to deep dive on this one. But you know that now we really insist on the healthy living and healthy oceans on this one. So you know that we are one of the seafood, we are the seafood leader since quite a while, and really want to focus on what is healthy for our consumers. We want also to focus on what is responsible sourcing nutrition for everyone, and we want to create long-term value for our stakeholders. I will deep dive a bit further, but we have set our 2025 targets around an EBITDA around $450 to $550 million in 2025. Okay, and we have 4 key pillars. The first one is our core business. The second one is we have some new value-added businesses. The third one is sustainability, and the last one is strategic investment. Quick focus on the core business, and here we are mostly talking about the ambient and the frozen business. And you know these are mature categories, and we do expect still to generate some growth, 3%. Some people may find this number a bit disappointing. We want to be a bit careful. Keep in mind we start from a 2020 level, which is quite high, of course, on this one. Something which is important also, we want to invest massively, around $200 to $300 million over the next 5 years in productivity. We want to achieve 3% annual conversion cost improvement year after year. Okay, so this is very ambitious target, and clearly we want to put some financial resources behind this one. On the target regarding the revenue from innovation with high margin, we maintain our objectives of 10% of revenue with high margin above 20%. And the last one, we have been really focusing on this one, is focusing on the loss-making businesses. We have some few of them. We really want to turn them around or to divest them. So I think we have a much more active management of our portfolio over the last year and over the next years also. Next one, the new value-enhancing businesses. And you can see already in our Capex some first touch of this strategy. We want to invest $500 million in these new businesses over the next 5 years. Some of the key ones will be pet care and feed businesses. So we want them to over-deliver 3 times the GDP growth over the next years. Ingredients and culinary will be also 2 areas where we really want to grow, and we really want them to scale up. We are looking for different M&A options here. We want to focus on some very dedicated, high-value, creative and strategic areas for us. By 25, we forecast that all these new businesses will contribute more than 1/3 of the EBITDA, so they will be very significant and very quickly. Sustainability, I can go quickly on this one because you know everything on this one, but we continue to expand our sea change program. We want to fight the climate change. We want to move to more and more sustainable packaging in 2025. We will continue to manage very carefully our operations. We want to move our operation, but also the whole industry operation, to something which is more and more sustainable. We mentioned the last one, the sustainability-linked financing. We want to continue in this direction, and I'm sure we can do much more. I was very pleased again with the outcome of this activity in 2021. The last one, you know, we have different partnerships. 2 of them are really key for us. Avanti is doing well and want to continue with this direction. The second one is Red Lobster. Red Lobster is still in a challenging situation, just to make it very clear. Like the whole restaurant industry in the US, they are still in surviving mode. However, we did really see some changes over the last months, and we really believe we are on the good track to turn around the picture and to improve the operation and to grow the business there. The last one is one of the focus we want to do, and we started already with the two new joint ventures that we announced. We want to invest more and more in this direction and having some new partnership in some very specific areas. Having said that, back to you, Lina.
Thank you, Ludo. Now we would like to open the floor for a Q&A session. Please feel free to submit your questions in the chat box. Or if you would like to unmute your microphone, please raise your hand so that we can give you a cue. Okay, so we have the first incoming question. Will full year 2020 results be the peak performance for Thai Union? Can we expect to see continuous growth in 2021?
So maybe I take this one. Of course, we know that in 2020 we benefited from some unique circumstances. We are fully aware that there was a strong push. There could have been in Q1 some pantry loading, some panic buying also. But now we can see in Q2, Q3 and Q4 the same very strong performance. So we believe such a very strong performance will continue in 2021. As I mentioned already, and you can see that in our guidance for 2021, we do expect some kind of normalization. The revenue we are planning for 2021 will be between 3 to 5%, and the gross profit margin will be around 17%. So we do expect some kind of normalization, but the ambition is still here. The ambition is very clear. We want to continue to grow. Okay, we don't want to stay here. We don't want to say it was a one-off. No, we have a very clear strategy to move to more value-added businesses, and we still want to grow and to continue to improve year on year.
Okay, thank you. For the second question, how do you see Red Lobster performance in 2021?
So Red Lobster, again, we mentioned this one. So we have been generating a loss by 320 something, I guess, million baht loss in, maybe I get back just to give you the right number. Just here, this one, 321 million baht loss. Here we have the numbers. So yes, we have a loss again. We are in a challenging situation, not only for us, but again, for the whole restaurant industry. Very clearly, I mentioned this one, surviving mode, not only for Red Lobster, but for the whole restaurant industry. We have some positive news I really do see here. The refinancing is now effective, and you can imagine how difficult it was to refinance a restaurant business in the US during this COVID-19 situation. We did it successfully, so it really shows some trust from some partners here. We believe in this business. We want to turn around. There were some very strong changes happening at Red Lobster in 2020. We discussed, they revisit completely the menu. In 2020, the off-premise business was representing something like 8% of the business before COVID. Now we are around 30%. So we do expect some significant change happening in 2021. Of course, it will depend a lot on the COVID-19 situation in the US, and we could see that in Q4 there was a deterioration of the situation. However, now we see that vaccination is really increasing. I think we have something like 60 million of doses which were provided to the US people, so it goes very fast. We do expect that with this vaccination campaign, the situation will turn around very quickly in the US, and Red Lobster will be really benefiting from this one. What I'm quite sure is, compared to Q1 2020, when it was the first time we faced with the COVID-19 situation in the US, we can definitely say that Red Lobster is in a much better situation and much stronger and much more well prepared compared to what they were 1 year ago.
Okay. The next question. According to the Thai Union feed mill share offering announcement to the set, will the reduced shareholding portion from the new share allocation cause a lower profit consolidated to Thai Union's financial statement? Or are there any expected sales and profit growth of Thai Union feed mill business expansion plan which can offset those reduced contribution?
So maybe two answers on this one. The plan regarding TFM is to keep the control of TFM. Okay, so we will move back to where we were a few years ago. If you remember, a few years ago, we were owning 51% of this business. We have been increasing a bit since then. And yes, the plan for us is to go for IPO for this company. But however, we'll keep the control. So here we are talking about a small portion of our shareholders. We will not sell a very significant portion of this one. You could have seen already over the past 2 years the impact of the move from 51 to 60+% shareholding. So yes, we will see a bit of dilution. It will not be that much, I think, in terms of impact. And very clearly, why do we do this IPO? Because we want to give TFM the means to grow by itself. And yes, absolutely correct. We do expect to have a top line growth and also bottom line growth, which will offset this dilution of our interest there. So very clearly, yes, we don't want to lose any money there. We just want to give them with some more means to grow for the future.
Okay. On the next question, regarding the 2021 guidance, the capex of 6 to 6.5 billion baht is quite high compared to 4 to 5 billion baht years ago. Can you share the plan for the amount increased?
Sure. And I think we mentioned this one during the explanation. Few explanation for this one. And you're absolutely correct. This is a record high capex, I think, for Thai Union. Few explanation. We say that we want to invest massively in some new areas, and here part of this capex. Here we have some significant new investment in a new protein factory in Thailand, and also a new culinary factory in Thailand. So this is one of the key drivers. You can see here the shift, and we want really to put some money behind these new activities. So this is one of the first reasons. The second reason, I mentioned this one, 2020 capex was low because of the COVID-19, because of the cash protection plan, and because it was technically difficult to bring some technicians in some of our factories. So here you have kind of a catch-up happening in 2021. Of course, we will manage very carefully the situation. If there is any tension on the cash, we can still reduce and revise this plan, but we want to really invest massively. We want to move quick on this one, and I think this is for us and for you also one of the clear proof that the management is very confident on the future of Thai Union.
Okay. On the next question, can you please elaborate on the one-time negative impact from the Russia TUMD item?
Sure. So if you remember, so we did invest in Russia. I think it was 2 years ago or 3 years ago in 2018, and we first invested to 45% of the business. 2020, and since then the business the achievement was not fully aligned with our expectation. We were under delivering compared to our expectation. We were facing with some local difficulties here, so that's why we took the decisions in 2020 to took over and to increase our shareholders into 90%. Okay, clearly the situation in our business in Russia is difficult, it's a tough one. So we did some restructuring. In 2020, we closed one part of the business, which is the frozen business. We changed the management here, and we have a very clear turnaround plan. Due to all these uncertainties, we decided to record a 4 million euro fair value adjustment in Q4 2020. So this is the one-off that Kun Emi mentioned a bit earlier, and this is, I think, the unique one that we have in 2020. We continue to follow carefully the situation of operation there. We want to see quickly some improvement there, but yes, the situation is difficult for us in this country.
Okay. So the next question from the floor. How does management expect Ambient sales to perform in 2021 versus 2020? Do you expect short-term gross profit margin pressure from low tuna prices?
So I mentioned this one. In 21, we do expect some kind of normalization overall at the group impact, and this is also this also applies to the Ambient. We don't expect the Ambient to grow by 9% or 8 to 9% like the way we did in 2020. So yes, we do expect some normalization in the sales. We will not have the same growth, but overall the picture will not be that different. Overall at group level, we are targeting from 3 to 5%. Gross profit margin pressure from low tuna prices. Let's see. This is only January. Indeed, the fish price was quite low, around 1,200. We do expect some inflation to happen in the next months to come. There was some explanation for this one. I think we did manage quite well. our gross profit margin in 2020, and we expect to do the same in 2020-21 to make it very clear.
The next question, how do you expect to increase sales year on year from a high base in 2020?
So you're correct. I think it's a challenge for us because, of course, the higher you start from, the most difficult it is to deliver a growth. We are confident. I can tell you this. Of course, a lot will depend on the COVID-19 development, and it's very difficult to predict anything. And I understand the question, but as I mentioned, our guidance for 2021 is really to continue to grow 3 to 5%, so a bit lower compared to our performance in 2021. If you look at what we have been doing over the last years, I think the trend is really good. The long term, even excluding the COVID-19, the trend is really good. We have some new product development. You could see some of them already in the first slides we went through. We are investing also in the value-added category. You could see also with the Capex that we have some significant investment here. Okay, and if you remember 2 years ago, also we did some other investments in the ingredients, and now that we will start to see the impact in 21. We will see, for instance, the first impact from our factory in Germany, the one which burnt. We mentioned this one 2 years ago. Now it's fully rebuilt. And I think it will be operational in Q4. So the impact in 21 will still be low. However, there will be some contribution coming from these parts.
Another question on Red Lobster. Has there been any significant change in strategy for Red Lobster post-shareholding shifts?
I think clearly we could see some change in the strategy. It was not related to the shareholding shift. Indeed, if you remember, we did change the shareholding with Golden Gate exit in the previous quarters, but the key drivers between the changes in strategy were really the COVID-19. These guys in Red Lobster, they had to face with a very unique and challenging situation. If you remember back in Q1 and beginning of Q2 2020, they closed the vast majority of their restaurants. Not only Red Lobster, but I mean the whole restaurant industry in the US. So yes, they had to change completely their strategy. They need to push as much as possible on the off-premise business. They had to cut massively in their SG&A, in their marketing costs, and also in their headquarters. They had to rethink completely also the menu. If you live in the US, I think the change was very impressive. We had a menu which was something around 20 to 30 pages at the beginning, and then we moved to 1 or 2 pages during the peak of the COVID-19. Now we are elaborating a new menu here. We are also been investing a lot and massively on everything we see digital. I think now you can have a full touchless experience when you want to order some Red Lobster, and this is something the guests in the US are really appreciating. Okay, so yes, we can see a really change in the strategy for Red Lobster, not coming from the shareholding shift, but really coming from adaptation to the COVID-19 measures. And again, we believe now Red Lobster is in a much better situation to face with the COVID-19. Again, Red Lobster is in a challenging situation. We know that. We know perfectly, not only them, but the whole restaurant industry in the US. But we really believe that they will turn around the picture in 21, and the share of loss or profit coming from them will be much better in 21 compared to 2020.
Can we have a quick update on the other components of the share of profit, such as Avanti, etc.?
So quick update on Avanti. You know, Avanti is a listed company, so you can have access to their financials. Usually they will go public a bit later than us, so you don't have a view yet on the quarter, and they don't have the same year end, so sometimes it's a bit difficult to compare. However, Avanti is doing well. They are doing well in 2020, and I must say that we are very pleased with such a performance. So you know, this is, if you compare to our own frozen business, I think there is one key difference between them, their business, and also our frozen business in Thailand, which is the currency topic. Right now, we can say that we are fighting against a strong Thai baht. Even if in Q1 you can see a decline of the Thai baht versus USD, overall around 30, 31 Thai baht for $1. The Thai baht remains very strong. Okay, in India they don't face with the same situation, so for them I would say it's easier. But overall, we are very pleased with this one. We have some few ups and downs with our other partners, but the real two key ones, which are the key impact in our numbers, are really Avanti and Red Lobster.
The next question. Does the polar vortex in the US impact Thai Union business now?
So here I would say I'm a bit unclear on the question. What do we mean exactly, Lina? Do you understand exactly what is the polar vortex that we are talking about?
I'm not too sure.
Okay,
no,
please, if you
sorry.
can just maybe precise the question, that would be perfect on this one. Let's move on.
Okay, sure. So where do you see the salmon price going in 2021 and 2022?
So salmon price, honestly, it's very difficult to predict. 1 year ago, I would have been unable to predict such a low salmon price for Q4 2020. Overall, we've been benefiting from some unique circumstances in 2020, as I mentioned. Few explanations for this one. There was no strong sickness in the salmon industry in 2020, and then the demand dropped mostly from China. Because they were less confidence in the imported products coming, so there were less demand coming from China. So overall, less pressure on the raw material, and this is one of the key drivers. In 21, we do expect some normalization, so we don't expect the salmon price to remain at 49 NOK for 1 kg. We do expect to see some increase. It will depend a lot on the overall COVID-19 situation. Depending how the production goes, depending how the consumption goes also in China, it will depend. We don't expect to benefit from the same favorable circumstances in 21. For sure, there will be some kind of inflation or some kind of normalization, I would say, back to a more normal level. I think at 49 NOK, I'm not sure this is very sustainable for the producers of salmon. So yes, we do expect some normalization to happen in 2021.
Another question on Red Lobster. The M&A strategy going forward appears very exciting and promising. What do we plan to do with the Red Lobster stake, which now appears to be impacting the entire group momentum?
So here I think there are two questions, and maybe I will start with the second one. Red Lobster, so here the intention is very clear. We want to turn around this business. And we are quite confident we can do this one. Again, challenging situation here, but we are on the good track and we can see some positive sign. And we are quite sure that in 21, we will really improve the share of profit loss coming from them. So there is no intention to change in the short term our views on the Red Lobster. On the first part of the question, the M&A strategy, yes, it looks exciting. You know that we mentioned that we wanted to be a bit quiet on the M&A to fix the core business. I can say that now the core business is fixed. However, we want to be very selective in our M&A strategy. So first of all, we want to change a bit the area we want to invest. If you look back to 2010, 12, 14, 16, we have been investing a lot in our core business, in the ambient or in the frozen business. Now we want to shift a bit the focus to some new territories, and you could see that also some first impact from this one. So yes, we are looking, but again, we want to be very selective, and we will focus on what is very accretive for our business. Maybe we take one or two more questions, okay? And maybe Amy, you take the 13th one.
Sure. Okay.
Lina.
So will the gross profit margin of the pet care business in fourth quarter 2020 sustain? What is the key driver?
So in the fourth quarter of 2020, the pet care business, the gross profit margin was very high, driven by the high volume from the existing product and the new launch products in both domestic and export markets. Like Ludo mentioned, we looking to see some normalization in the majority of our products. So it would be, it's with the COVID-19 situation, it would be difficult. There's a lot of uncertainties, and it would be difficult to assess the situation, what's going to happen in 2021. And within the guidance that Ludo just mentioned, it's going to be within 3 to 5% range, or 17% gross profit margin in average for all our product segment. Do you have anything to add, Ludo?
No, that's very clear.
Next one.
Yeah, please. I think we have the 14.
14. Okay. What's the effect for the currency to sales growth in fourth quarter 2020?
I think we mentioned this one. So our reported growth is 1.9%, including the FX. Now, if you exclude the FX, we are declining by 0.9%. So yes, we do have a very strong positive FX impact happening in Q4. Again, mostly coming from the euro and coming from the GBP. So we are enjoying this one. Okay, in 2019 and 18, it was the opposite. So very happy to see such a development. Again, the USD, you know that for us the key exposure is the USD. The USD is kind of stable, slightly improving versus last year.
Will the refinancing of Red Lobster reduce interest, and by how much?
So here, that was clearly the intention at the beginning, when we did the refinancing of Red Lobster, to have a very strong reduction of the interest. As I mentioned before, you could imagine that the refinancing such a restaurant industry at this specific time of the year during the COVID-19 was very difficult. So there won't be any significant change in the interest rate. We are already very happy that we have been able to refinance the company. We have been securing the next 5 years for Red Lobster. So no significant change to expect. I think it was almost impossible to refinance, as also during the COVID-19 situation, to benefit from some lower interest rates.
Okay. Can you give us a timeline or development of sale contribution of any innovative products or startups?
Sure, I think you can go through this one. You have it's part of our strategy slide on this one, and maybe Amy, can you move to the specific slide on this one? Here, where we say, okay, for 2025, our target is to have 10% of our revenue with innovation, with margin higher than 20%. So here, this is what we try to have, a significant one on this one. So here we are, next one. You can see here, this is a third bullet point. Okay, so here we have our very specific target for innovation, 10% of our revenue in 2025.
Okay. Can you elaborate more on the packaging business as a driver?
Sure. So first of all, this is not packaging related to pet care. You know that usually when we do communicate on the pet care, value added and others, this is a combination of different segments. So packaging is different from the pet care here. Okay. So packaging, what is it? We have different companies here, and basically they are mostly producing some cans, and they're producing some cans for our Ambient business, which is their first activity. And it was one of the key focus that we put. We don't talk a lot about this activity very often. It's not huge. However, they've been doing really great in 2020. We are really developing, and I think we can do much more also in this direction. So you could see that pet care was strong, but also packaging was also very strong, and this is one of the key drivers for the high gross profit margin in Q4. Maybe we take a last one, and then we close.
Okay. Would you kindly update us about the tuna oil plant?
So here, I'm not sure which one are we talking about, because now we have different one. If you're talking about the crude oil in Thailand, it's working well. They have been delivering really well in 2020. It's in line with our plan. So we are very happy about this one. If now you are talking about the other plant that we built in Germany, the refined one, the construction is in the process. We did some great progress. So we know that we launched this factory in 2019, and then a few months after we launched the factory, there was a fire, and the factory was completely destroyed. So since then, we built again the factory, and we will go through the commissioning process and then the audit process, and we do expect this factory in Germany to start to be effective in Q4 2021.
Okay. Thank you very much. That concludes the presentation. Thank you for joining us today. For those of you who are in Bangkok, please join us for the analyst meeting tomorrow at the Okura Prestige Hotel, starting at 9:30 a.m. followed by a lunch buffet with our management. We will be having a product showcase and food tasting booth with our select After Yum DIY tuna and alternative protein products. So we encourage you to arrive on time and, more importantly, come on an empty stomach. We look forward to seeing you there. Thank you very much.
Thanks a lot. Again, I encourage you to come tomorrow. I did a testing a bit earlier this week. The products are really good. Please don't hesitate to come, and thanks a lot again to all of you.
And thank you, Ludo and Kun Amy, for joining us today.
Thank you very much.
Thank you.
Thank you. Bye-bye.